Hello everybody, hope you're all doing well. It's Lane here with MetaShackle. Today I'm going to be going over the XRP chart as it has changed considerably from the charts that we have been using for about the last month or so. The flash crash that we experienced on the 10th literally wiped the slate clean and changed so many things on the charts in regard to patterns, fair value gaps, Elliott Wave, took out a whole slew of weak dojis. So I've basically been having to rebuild my charts starting over from the ground up. But there are some very interesting things that I am about to show you. So this is definitely one of those videos that you want to watch from the beginning all the way to the end. So let's not waste any more time and let's get into the charts. And if you like the work that I do here, a great way to support me is by joining the Patreon. It's only because of the generosity of my viewers and my Patreon members that I'm able to do what I do. So it's definitely something to consider if you'd like to support my work. So just taking a quick look, here is the new chart that I'm now using. I've basically wiped everything off of the chart and started right back from the very beginning. I've also tried to make it just a little less cluttery than what it normally looks like, because if you've watched my previous videos, you know that I've basically got so much stuff on my charts at times that short of being me, it's basically impossible to read them. So I am also trying to simplify it so that they look a little bit more presentable. But what we're looking at here is the weekly chart. This area on the chart right here that you can see within this channel is the area that we had the dragon pattern as well as the Elliott Wave Triangle pattern, which has now been broken. But we will come back to this towards the end of the video and go over this in more detail. But I just wanted to give you a look at the weekly chart to just kind of give you a better idea of what we're dealing with now. But now moving over to the daily chart. Price is currently trading right here within this bearish fair value gap on the daily chart. But what I want you to focus on right here is this bullish order block, which is on the weekly, which is resting at the bottom of the pattern underneath the equilibrium zone and just below this channel that I am now using on my new updated chart. So now I'm dropping down to the hourly chart. You can see that same area. This is where price is currently trading. This is the bearish fair value gap. This is the bullish order block that I was just talking about. We can see that price is wicked through this on the 10th during the flash crash. But I want you to pay attention to this small fair value gap here in green, as well as this fair value gap in green. Now, since the flash crash happened so quickly, the only way we can really dial in on these is we have to go to a much smaller time frame. So now, dropping down to the 15-minute chart, you can see that we're dialing in even further. The current price action is trading right here. Now this area is what I want you to watch. Once we zoom in on this a little bit further, we can kind of get a better idea of what we're dealing with. Since this happens so quickly, you really have to get down into those smaller time frames in order to see anything of significant value. But what we can see right here on the 15 is once the price started to fall, it moved through the equilibrium zone. This massive candle right here literally dove right into the bullish order block and even deeper, coming all the way down into this range, about $1.38 as far as this chart is concerned. But you also want to pay attention to the fact that the candle body itself ended at exactly the bottom of this bullish order block. When this candle formed next to it, it is exactly perfect at the bottom of that bullish order block. Price pushed right back through it, then continued up here with this candle dipping down in for additional liquidity before pulling away from it. And at this point, it has not touched it again. With price trading up above that area up to where we are currently trading right here. So now we're dropping down to the 5-minute chart, dialing in even further to get a good close look at what happened here. Now with this bullish order block right here in the gray, we can see that the price came down, bounced perfectly off of the top of the bullish order block, pushed back up to the bottom of the equilibrium zone where it was rejected. This candle pushed straight through the bullish order block, then forming this pin bar right here, which tested the bottom, was rejected, wicking down here to that same $1.38 level. Price then formed an additional candle, taking a small draw, and then pushed right back up through the bullish order block. Here's the retest candle that we saw right here on the 15-minute chart. But what you want to take a look at on this chart is this green fair value gap. Dialing in just so you can see how it's put together. The top of this wick and the top of this wick create this gap right here, which is also in the form of a weak doji, creating a bullish fair value gap right here. It also did the same thing right here. Now the reason why I'm not marking this one is because when this fair value gap formed, there was a draw on liquidity taken out of this particular bullish fair value gap, which makes it likely that we could see this happen again. But in regard to this lower fair value gap, I want you to pay attention. The bottom is $1.88, pushing up to the top right here, which is at about $1.92, sitting perfectly below the bullish order block right here. Now we're jumping over to the heat maps. We're currently looking at the 3-month. This is where things really start to get interesting, because as this collapse began, you can see previous to this liquidation candle, there was zero liquidity anywhere on this chart in this area, which basically means that there was zero resistance of any kind as this candle was coming down. We can now see over here that liquidity has been building as people started to buy in once their platforms actually allowed them to log back into their accounts to take advantage of this. The lowest liquidity that we can see on this chart right here is sitting at $2.18. This chart shows zero liquidity below this. From that point, this is basically where the smart money started to buy, with retail investors piling on top that have been adding to their positions ever since. But that's not the interesting part. Now moving down to the 1-month chart, we can see this candle that drew on liquidity. The lowest that we can see on this chart is sitting at $2.1775, with zero liquidity anywhere below this range. Story's the same thing. The smart money got in here, retail started to pile in from that point moving forward. Now, jumping over to the 2-week chart, we can see that there's an additional band of liquidity down here, even lower than the area we were just looking at. This liquidity started at about $1.80 and ended at about $1.90, which is right in the area of that green fair value gap on the very bottom that I was pointing out to you. But let's dial in a little bit further, because there's a very interesting story to be told here that most people would simply overlook. Now, dropping down to the 1-week chart. Now pay very close attention to what I'm about to show you, because this tells a very interesting story. Right in the area of that lower green fair value gap that I was just pointing out, right here, we can see that the lowest portion of liquidity on this map is sitting right here at $1.80. Now pay attention to these next two orders. This order right here, resting at $1.84.1, is $20.15 million. If we come up to this top band of liquidity right here at $1.9179.6, it is the exact same amount, $20.15 million. We come down to this largest, thickest band of liquidity on the bottom, sitting at $1.86, which is exactly $40.3 million. We'll move up to the yellow one just above it at $1.89.872. It is the exact same size at $40.3 million. So look at what we're seeing here. We have an order of $20.15 million with one over top of it that's $40.3 million. Then we have the exact opposite layout. Another order at exactly $40.3 million, crowned with another order of exactly $20.15 million, which means that these four orders right here that you can see on the chart are from the same person. They laddered their buy orders in right here. Other than these orders, there's no liquidity resting up in this area here until you get all the way to $2.18. Somebody with a lot of money put these orders in, which in total add up to about $120 million, with quite a spread between anyone else who would put any additional orders during the flash crash. It's almost like somebody had some insider information. When you look at this band of liquidity resting right up here, which is just below these lows, which is right in the area of the bullish order block, because remember, we had this retest candle here, then it never touched it again. But this entire band of liquidity right here that we can see that formed, starting right here at about $2.19, coming all the way up here to about $2.26, if you add up all this liquidity in this entire band right here, it is smaller than this order by whoever this person is. Now, by taking a look at this heat map, you can see about the point where retail was finally allowed to come back into play. Once the price started pushing up here, people were in shock. It started to push back down. People started to fill orders. Finally, price moving up to where we're trading right now. But how is it that all of the people here that were willing to place these buy orders were not able to get in anywhere close to where this person was? And there was instead a substantial gap between them before they could start placing the orders. Because many of us who were trading at that time when this crash began and watched it all the way through, we are all well aware that once this crash began, we were not able to log into our accounts, or the accounts would not resolve for us, so we were unable to reduce our positions, to kill any trades, or to add any trades. We simply could not buy. And on top of that, those of us who had low limit buy orders, with me, who personally had about 12 low limit buy orders set in total, not a single one of them filled, even though price wicked through quite a few of them. But you also have to take into consideration that I trade on BitUnix, and there's a lot less available liquidity on BitUnix than, say, something like Binance or Kraken. Because a lot of the people that I've been reading who have put comments on saying that their orders filled are trading on these bigger platforms that have much more liquidity. But I find it very interesting that one single individual was able to get in these orders right here. This order right here may very well belong to them as well. To where these orders were likely set with limit buy orders, this one could have simply been a market order of something like that. But I think the odds are this order likely belongs with these other four right here, and it was in fact the same person that put in all of these buys. It's kind of hard to believe that looking at this chart right here, that all of this liquidity right here resting in at about $130 million in total, all belongs to one person. And whoever that person is, if you can track them down, clearly has insider information. There's no doubt about it. They knew this was coming. You mean to tell me they're the only people on this entire liquidity heat map that had orders available to buy during this crash? Give me a break. The odds are so far against that being a possibility that it's not even funny. Now, jumping back over to the XRP daily chart, the previous chart that we had been looking at for the last month showed a 5-wave Elliott wave move to the upside. Now that impulsive wave structure started right here with the wave 1 coming into the wave 2, with this point where X is being the wave 3, coming down into this Elliott Wave Triangle right here, which was a 5-wave move ending with the wave E here, as well as the wave 5 termination to the upside. When this flash crash occurred breaking to the downside, price went through the wave 1 termination right here that we had been talking about, invalidating the entire pattern from the perspective of Elliott wave, which is why I have removed all of the Elliott wave counts that were in here. And I haven't put the ones back in this area because these are still 3-way moves all the way through to here, moving up to this breakdown where we saw the flash crash. But I will be filling these in. As it sits right now, we still have a very good opportunity, because even though the previous 5-wave Elliott wave move has been invalidated by this flash crash, we still have another prevailing trend right here with an additional 5-wave move to the upside, with this being the wave 1 down to the wave 2, moving up to the wave 3, with the corrective wave between wave 3 and 4 being a WXY, because it's divided into 3 parts, 3 waves here, 3 waves here, and 3 waves here coming down into the flash crash, with this being the termination of the wave C. Now, if this primary 5-wave Elliott wave count is true, then this point right here, where the flash crash stopped in this area, would be the wave 4 termination, matching up here with the wave Y termination as well. Which means that this last ABC, which would have been A, B, coming down for the C wave, which means that we would be starting a new 5-wave move to the upside to complete the primary wave 5 that we can see here. The other interesting thing that we need to consider is, now that we've seen this flash crash pushing down to this low, it has given us a much lower point to go off of in regard to our Fibonacci levels. And when we pull the new Fibonacci levels off of this pattern, with the low resting right here, pulling off of this high here, we get these fib levels right here. So if this 5th wave of the primary 5-wave move to the upside plays true, the 1.618 is now sitting at $6.65, with the 1.786 resting at about $7.83, meaning that we could have an incredible move to the upside. For every action, there's an equal and opposite reaction. We now saw one of the most incredible liquidation events in history pushing to the downside, clearing out all of the liquidity on this entire chart, with the exception of this area right here, where one buyer placed all the orders we were just talking about, with everybody else's orders being right here in this area moving up. We can see that this crash actually did some very interesting things for us, because this move down here cleared out all of the liquidity from this section of the pattern. Price came back up. We got the Trump tweet pump right here. Price then came back down for this candle right here, which cleared out all of this liquidity and any liquidity that was remaining under this candle. Once we saw the push up here into the subsequent breakout, coming all the way down to this point here, all of this liquidity that had been stacking up on this chart, going all the way back to that candle in April. At this point right here, you can see that this one candle cleared out all of the liquidity for this entire chart, going all the way back to here in November of 2024. Taking out nearly an entire year's worth of liquidity in one fell swoop. But there's definitely the possibility that if we did make another big move to the downside, it would be very dramatic. Doesn't necessarily have to be dramatic in time, meaning that it would just be another liquidation candle. It could be a gradual move working to the downside, because there is such an incredible lack of liquidity down here that there's virtually no resistance. So if price did want to push back down into this area, it would be a lot easier than if there was a bunch of liquidity stacked in this range. We do have this bullish fair value gap sitting right here, which repelled the price previously, which is an area that I had been talking about in my videos quite some time ago, going back about 6-7 months ago, when I originally was talking about the flash crash back at this time, which did not come to fruition at that particular time. But we also have this bullish order block still holding us up, which still has the potential to act as resistance, even though it would be diminished at this point. We have another bullish fair value gap right here in the green that formed during the flash crash, and price is currently, at least as of the time of this recording, is trading above the equilibrium zone and is above the equilibrium line, which is the green line in the center of the equilibrium zone, which is this area marked out right here on my chart. Price is currently trading into this bearish fair value gap, which certainly won't be easy to get through, and there are multiple potential targets on the chart, With this weak doji reverse waterfall, which is sitting at $2.27 if price reverses and moves to the downside, which aligns perfectly with this fair value gap, and which would make a lot of sense because we know there's liquidity down in this area. So if price decided to come down for a retest, it's likely going to be resting right in this area. And these weak doji reverse waterfalls often act as reversal points, meaning price would trade down to it, it would hit somewhere in this area, then we would see price move the opposite direction. We also have potential targets to the upside. With this weak doji waterfall sitting at $3.04, you can see on the chart right here. We also have one up here just below this bearish fair value gap, which is sitting at $3.26. And we have yet another one going back to the time when the all-time high was formed, which is sitting at $3.55. These will be the two that I'll be keeping an eye on for now. I definitely want to see price continue to trade up above the equilibrium zone, but I would not be surprised if we do see price come back down, getting rejected in this bearish fair value gap, pushing to the downside, coming back for additional liquidity before making any substantial move to the upside. In fact, I think that the odds favor this retest. But we also know that this fair value gap right here only exists because of an insider. So knowing that an insider has all of their orders placed right here, it's very likely that we would not see price come back down into this area. And if it does start to drop down, there's a good chance that this person would just close their position, meaning that this liquidity would basically vanish anyway. So that's definitely what I'll be watching for. And with price trading in this well-defined channel that I have marked out on my chart right now, we definitely want to see this lower trend line hold. Even if it does come down for a retest in this area, we want to see price stay up above this lower trend line and start working on breaking this bearish fair value gap and getting above this upper channel trend line. I did have a wedge pattern here when I was looking at the dragon pattern, but I think this channel actually fits better. So as you can see, I have made a lot of changes to my XRP chart since the flash crash. But I still have some work to do in this area right here as far as going to the finer points. But as we can see, this WXY correction is now complete, matching up with this wave 4 termination. And even though this 5-wave Elliott wave impulse to the upside is now broken, we still have the exact type of pattern on the chart right now, which is spread out over a much larger time frame since the previous wave 1 started here. And on this chart, it starts here, which means that this wave 5 could actually be much bigger than we had originally anticipated, moving up to this particular set of Fibonacci's, which is quite a bit higher than the ones we were looking at and considering before. Of course, there is always a chance we could end up seeing a wave 5 that's not nearly that strong, making a smaller move. But either way, this pattern is still in play until it's broken, basically being our renewed hope since this liquidation candle here basically destroyed everything that we've been talking about for the last month. And if you would like to trade spot, or you're just looking for a place to swap your cryptos for zero fees to save a little bit of coin, you definitely want to take a look at BitUnix. It's the only place that I trade and I swap all of my cryptos here. So definitely check them out. You'll be glad that you did. So thank you so much for watching. I appreciate each and every single one of you. Good luck and have a great day.